GM everyone, and welcome to Smart Contact, an interview series with the world's most influential and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2024 lead sponsor, and by Invest Hong Kong, co-sponsor of the Smart Contact series at Blocktober. Like and subscribe for more Smart Contacts.
Welcome to another episode of Smart Contact, produced by Web3 Harbour, powered by our lead sponsors, Invest Hong Kong and Circle, our 2024 sponsor. I am Sean Lee. I'm the co-founder and chief strategy officer at IDA, and I am your host today. We are recording with a live audience, and today's Smart Contact is Jeremy Allaire, co-founder, chairman of CEO of Circle. Welcome to the conversation today.
Thank you. It's great to be here.
So Jeremy, you and I have known each other for a number of years, even though this is the first time we have actually met in person. I used to run the Algorand blockchain, and we were one of the first to support USDC on a non-EVM, non-Ethereum blockchain back in, I think it was June 2020. Yep. And I'm also a policy advisor for the Crypto Council for Innovation, in which Circle is also a key member in driving key regulatory messages around the world with regulators in different jurisdictions. So we have many points of connections, both from a infrastructure perspective, from a market perspective, and obviously, more importantly, from a policy side as well. So a lot of the conversations that I want to drive with you today is really surrounding some of these topics and gain some of the key insights that you can share with our audience that are listening onto the podcast.
Awesome.
Yeah. So you are here in Hong Kong, and you just ran a phenomenally successful, and I've heard it from many feedback from folks already that attended the Circle Forum yesterday. What brings you to Hong Kong, and what do you see in a place like Hong Kong in terms of stablecoin adoption, and then also a US dollar-based stablecoin in terms of driving this market?
Yeah, sure. Circle Forum Hong Kong was I thought really great, and so great to meet so many people here in the community. For us. USDC and stablecoins have been a hugely important part of the Web3 ecosystem for a very long time. Asia as a whole is probably the largest user of USDC in the world. There's sort of this concept like, USDC is from a company in the United States, it's more of a US thing, but actually the vast majority of USDC adoption is outside the US. And it spans, Asia, which is, I think, our biggest market. We have huge presence in Europe, and it's also wide adoption in emerging and developing markets as well. So, we made a decision to really try and invest more in Asia as a company, and we set up our Asian headquarters in Singapore a number of years ago. Became a regulated firm there, but something really significant has been happening, which is that over the past couple of years, every major financial market center is adopting new laws for regulated stablecoins. And from our perspective, this is a hugely positive development. I'm sure we'll talk more about it. But everywhere where you have clear regulation on stablecoins become more useful. You have this framework where, whether it's a person or a household or a company or another financial institution, once you have stablecoin money as legal electronic money, the use cases for it can really, really explode. Now, organically, we've seen a lot of traction out of Hong Kong. There are so many startups, fintechs, others that already support USDC in their products in a lot of different ways. We launched the ability for our global customers to utilize local banking here in Hong Kong for access to USDC. Many of the exchanges here on the institutional level support USDC. So it's been a big market, and so now with pending regulation, we really feel like it's the time to invest more. We're excited about what we're seeing, what was just outlined in some of the opening comments here, so for us, I think this can become one of the biggest hubs for stablecoin activity. And I think specifically to your question around digital dollars, digital dollars are the most demanded kind of digital currency in the world, and the most used digital currencies in the world. And that's been growing. It's been growing when crypto markets are up or down. It's just this demand is there. And that's because dollar stablecoins solve real world problems, storing value, transferring value, exchange of value globally. And we've watched as cross-border trade and cross-border settlement, the integration of this into real commerce has started to unfold, and we've seen that accelerating over the past couple of years. And of course, Hong Kong, as sort of the gateway to Greater China, plays a really important role historically as a financial market center in that gateway. But I think we'll continue to play that role. And so, while we have major customers in Brazil or Mexico, a lot of those are actually using USDC to make payments to companies in Asia that want to settle transactions in dollar stablecoins. So this is a global phenomenon, and this is a trade hub and an investment hub, and so we're excited to keep building here.
That sounds really exciting. I mean, the BRICS summit was just happening the last few weeks, last few days actually. So there were a lot of announcements coming out of there as well. So I think the whole world of economic trade, both in terms of the traditional developed economies, but also the global south, I think a lot of those adoption for digital currencies is really going to accelerate. I want to touch upon a little bit, I know it's election seasons, right? So the number one topic on a lot of minds are not so much on the candidate. Let's not go there, right? But this notion of kind of China-US tension. And obviously Hong Kong is a special administrative region in China, but you do highlight a lot of the kind of economic trade, both from a financial services perspective and also for importer-exporter business in Hong Kong. Is that do you see that as a concern in terms of a development from a regional perspective? Or is it purely just when there's need, when there's demand, there's a market? Is that how you look at things?
I mean, look, I think part of the founding vision of Circle is this idea that if we can move the exchange of value in all of its forms to the internet, and we can build a truly globalized internet financial system that fosters that exchange of value, that can grow economic exchange, that can grow the integration of the world's economies, that can actually increase global economic prosperity. That's actually at the core of Circle's mission, that when we think about what we're trying to do. And so we've always been interested in the ways in which an open global network like the internet and open global public blockchains connect the world. And do that in a way which is not bound by any specific country, but really creates an environment for counterparties to connect, trade, economically interact in the same way that we can communicate and use the rest of the internet. And so I believe very deeply in that, and I think that is a kind of an inevitable force that this sort of global scale, internet-based integration of economic activity is an inevitable force.
Right.
And because of that, there's always going to be different moments in time where there's shifts in political or economic interests. The balance of trade changes. You've got different types of leaders in power who take more protectionist or nationalist policies, or it's a complex world, obviously. But the rise of China, it has been extraordinary, obviously, and the integration of China into the world is going to only grow. I don't see this as a world that bifurcates and separates. I think that again, the forces of economic coordination and integration will continue to lead us towards that. And so, with that in mind, I'm looking past any given period of 4 years of leadership.
Right.
I think our vision when I founded the company was a 20 to 30 year vision. And we're just over 10 years into this. And so when I think about the next 10 years and I think about the next 20 years and what does the global economic system look like? What does the internet financial system look like? I know it's going to be one where households and corporations are connecting economically, mediating value exchange over the open internet, no matter where they are in the world. And so I think that's sort of my high level view, there may be ebbs and flows and openness and closedness and things like that, but I think the general direction seems pretty clear to me.
Sorry to interrupt the video, but I want to tell you about our 2024 Smart Contract lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
We also want to thank our Smart Contract at Blocktober sponsor, Invest Hong Kong. Thank you to all of our sponsors and community partners. Now back to the conversation.
Has it only been 10 years? It's just those of us that are in the
11.
Web3 space. I mean, it seems like it's been forever that Circle's been around. I mean, let's talk a bit about that as well, right? So you cover some of the licensing regime from a stablecoin perspective that are indeed developing around the world. I mean, last I looked, I think there's 6 or 7 now jurisdictions that have clear stablecoin regime, right? Not virtual asset regime, but stablecoin regime, right? So you look at obviously MiCA, in which Circle has acquired a approval to operate there as well as places like UAE, Japan, Singapore, and then also Hong Kong that are finalizing our regime here. So do you see that really as a trend? Like, I mean, every day we're starting to hear almost some of the offshore islands, or Bahamas, I heard was also working on something as well. Is that a global trend because of the usage of stablecoin, or is it more because, hey, someone else in other jurisdictions already got a license regime, I gotta have one as well? You talk to world leaders and regulators around the world all the time. Do you get that sense as well?
Yeah, I think what many people don't realize is that in 2020, so 4 years ago, right, the G20 group of nations made the development of global stablecoin policy a key priority. And in 2021, there was an agreement reached at the G20, which all the G20 nations signed, which said we all agree to a set of common principles for stablecoin policies, and we all agree that we're going to implement regulatory regimes in our countries. And so, when the G20 members sign an agreement like that, then they need to actually go do the work in their own jurisdictions. Like, it doesn't just become law. Right. In some places you have regulatory agencies that then submit things to a legislator. That's sort of the Hong Kong model. That's very much what happened in the US, in Europe. And so all these places, people got to work really trying to understand, okay, we have these policy principles, how do we turn those into laws? And so what you're seeing now, those examples, those 6 or 7 examples these are all major financial market centers. Mm-hmm. And so this is very important because they're hubs for how money moves. And so they're all prioritizing having these clear rules around stablecoins. And so this is a global policy agenda that has been going on for 4 years, and we're now getting the first output of that, meaning by the end of 2025, every major financial market center in the world, regulated stablecoins will be legal electronic money that are an integrated part of the global financial system. And that means households, corporations, financial institutions, and others will be able to use these and know that this is a kind of cash like form of money, that has some incredible technological capabilities, but that are prudentially supervised by primarily central banks in all these jurisdictions. And so from our perspective, we've been advocating for this. We were part of the work with the G20 and the Financial Stability Board and developing those policy recommendations. And we're working with every one of those governments to give advice, to give feedback, to provide responses to consultations. And from our perspective, we are the largest global regulated stablecoin issuer in the world. Mm-hmm. And so what happens in all these jurisdictions really matters. And global stablecoins are here. They're used in hundreds of countries. And so I don't think it's going to be just these 6 or 7 countries. I think that, essentially every jurisdiction will develop local stablecoin laws, both to address sort of how stablecoins circulate in their economies and in their financial systems, but also to create the rules for local currency stablecoin issuers as well. We're actually tracking almost 100 local currency stablecoin projects that are legitimate, meaning like these are companies that are regulated companies that are working proactively to issue different currency stablecoins, which is a really positive and exciting development as we think about what the internet financial system is going to look like.
Yeah. I mean, I've been giving a few talks recently around kind of stablecoin developments, especially from a policy perspective. And one of the key points that I would normally point out, at least today, from a market circulation perspective, is that 99% of all stablecoin today are US dollar pegged, right? Including USDC for obvious reasons. But if you look at kind of international payments in terms of like real economic flow, it's roughly about 60%. So you would like to think that these two numbers are going to normalize at some point, right? And that doesn't mean the share of US dollar stables are going to decrease. It's actually because the overall pie is going to significantly grow. So I think that's going to be an interesting area to continue to monitor, probably starting with these jurisdictions that actually have a stablecoin regime. And then kind of growing from there. Now, one point I wanted to kind of get your point though is that, so you mentioned about the G20, right? So looking at harmonizing kind of stablecoin frameworks and policies, but a lot of the users of stablecoin today is actually outside of the G20, right? So how do you kind of see that in terms of the actual user perspective of how stablecoins needs to be regulated? But then at the same time, these regulations are coming from more of the developed economies that have very strong financial kind of services backings. How do you see that kind of rectifying in that sense?
Well, when you look at the global economic system today, if you think about the financial market infrastructure of the global economic system, it's a hub and spoke model, right? Meaning you've got regional capital markets hubs. That are kind of core to how trade settlement, financing, payment settlement, currency liquidity, all these things are driven by these hubs. And so, you have hubs in the different regions. We've just talked about what some of those are. And so that's critical no matter what, right? A hub or multiple hubs in Asia, for example, are providing hubs to, if it's Singapore or Hong Kong, right? You're a hub for a huge range of countries around here, but also a hub for facing counterparties in, say, South America or places that have strong trade relationships, say, with exporters here in Asia. So these hubs remain really key for establishing what is like legitimate regulated forms of financial instruments and providing to all the participants. So if you're a business, let's say, that is in North Africa, right? You're going to care about infrastructure that's in the EU and infrastructure that's in the UAE, and the use of those as kind of regulated instruments for the kind of trade and conduct and business that you're conducting in North Africa, right? So these hubs play these key roles, and I think with stablecoins, it's quite similar, right? You're going to see kind of the liquidity flywheels coming off of these hubs and then servicing all of these other markets. And that's really what we see. Our strategy has been to make sure that we can have what I call digital dollar dial tone available at an institutional level in all of these hubs. But we've expanded that, and Brazil and Mexico are G20 members, right? So to markets like Mexico and Brazil. And so we want to make sure that, you can go from a local currency in a real-time banking system, create and redeem USDC safely at an institutional level, and then utilize that in both those regional markets and global markets as well.
And is the focus to continue to drive additional institutional usage of USDC? Or do you also have kind of strategies around other currencies? I know obviously Circle has the EuroC, but like Tether, I think a couple months ago announced they're going to do a dirham-backed stablecoin out of the UAE ADGM regime. Is that similar in directions, or are you really going to drive home the notion that obviously US dollar is a dominant currency in terms of global trade, and the focus is predominantly going to be placed there?
Well, so as you noted, we issue a dollar stablecoin and a euro stablecoin, and EURC is now the largest euro stablecoin. It's grown quite fast, and we expect it to grow a lot. We're quite optimistic that the use of euro digital currency in the Eurozone itself is going to grow in commerce and finance, as well as in certain trade applications, cross-border trade applications as well. So we are not dollar maximalists, so to speak. So we do see that. And then I think conceptually, the way we think about what we do is we think about Circle operating, one of the world's largest and certainly the largest regulated stablecoin network. And we're building a lot of infrastructure technology for that stablecoin network. So general purpose protocols for transacting stablecoins, interoperability protocols that allow for safe transport of stablecoins across different blockchain networks and platforms, abstractions that allow people to utilize stablecoins as a fee payment currency on blockchain so that we can simplify the UX of just interacting with blockchain applications. We're building other higher level tools to support compliant transactions with stablecoins. We have our new compliance engine, for example, that is in beta. And there's many more things that we're working on that are, from our perspective, critical to just safely using stablecoins on a global network for financial and commercial applications. And so as we build that up, we'd love to work with other high quality stablecoins that are being issued in other jurisdictions. We don't feel like as Circle that we need to go issue every currency. Right. That like there are going to be great companies here in Hong Kong issuing Hong Kong dollar stablecoins, or eventually maybe offshore RMB stablecoins, or who knows what.
You're talking about things that I'm working on, but
okay,
we'll stay tuned on that.
That's very good. And so for example, we're working with a major player in Mexico on a peso stablecoin. So there's this is great. We want to see, if you're going to have an internet financial system, the internet financial system needs to interact with local currencies, local economies. We want to have on-chain FX that operates more efficiently than off-chain FX, meaning straight through processing. You're going to have liquidity providers that can clear and settle at scale at pricing that's superior to what the banking system provides with instant settlement atomically anywhere in the world. So we want to see that world. We want that to be itself a composable, programmable primitive that any developer, any fintech, any user can just connect their wallet to and get the utility out of. And so we really want to see the growth in stablecoins, and I think I may have said, but we're tracking almost 100 different quality projects. So we want to see that, and we think Circle can provide great technology that other stablecoin issuers can also take advantage of.
I think a lot of folks may not be aware of the technical and infrastructure level innovations that Circle is continuing to drive. Right, you've got the wallet infrastructure. You talk about this compliance capability that you're building out as well. I think a lot of people, when they look at stablecoin, they look at it as a coin, right? And very often when people ask me, hey, why are you building a stablecoin? I'm like, I'm actually building financial infrastructure, right? It just so happens that there is a digital dollar, a digital currency that is sitting on top of it, because you do need to transact value on this network, right? This infrastructure is really, really critical.
Yeah, very much. I mean, I talked through some of this at Circle Forum yesterday, but like our conceptual model is, we're operating a stablecoin network, and it's a public internet platform and utility that anyone can build on top of. And so it's essentially a public API for digital dollar storage, transaction settlement, and use on all these blockchain networks. And that's a very valuable, useful utility. And you don't need permission to do that, right? If you're building a wallet app, you can just connect to those protocols and you have that support. If you're building a point of sale system, you can connect to those protocols and have support for that. And so it's developer driven. Developers integrate these protocols into their own applications. Those applications drive user utility, and that creates really powerful network effects. And so, yeah, I mean, issuing an asset and saying you have a bank account with it and sort of that's one thing, okay? But actually, building out a platform and a utility that has broad adoption by developers and end users, and then building out all of the financial infrastructure globally to make sure that it's liquid and available and compliant and regulated in all of those jurisdictions is a fairly sizable task. That's why we have 1,000 people working on it.
Right. Okay. So let's come back a little bit to the topic of today, right? The rise of kind of regulated stablecoin. But we all know that the largest stablecoin today is unregulated, right? And it doesn't seem like there's any plan of getting regulated, at least from what I can see. Do you see a bit more of a balanced approach now in terms of adoption? I mean, in MiCA, for example, in Europe, for example, I think a lot of the exchanges are starting to off-ramp these unregulated stablecoins just purely based on compliance requirements and the MiCA regime. We're obviously seeing that here in Hong Kong as well. Yeah. Do you see that as a continuing trend, or do you see that there's still going to be users that may not care as much in terms of that that kind of regulatory backing and continue to use some of these coins that are out in the market today?
I mean, our focus is on making infrastructure that's useful for the mainstream of the world, right? I want everyday people, households, I want corporations, I want financial institutions to be able to build on this. And when I think about the total addressable market, it's the total addressable market of legal electronic money, which is approaching $130 trillion today. So there's a big market for electronic money. And there's a big market for the utilities that kind of utilize and move that money. It's about $1.5 trillion of revenue just from like the utilities that move around money. So that's what we're focused on. And we know that that's only going to happen at scale when this becomes a defined, regulated part of the global financial system. So that's the game that we're playing. That's the game we've always played. And yes, I mean, I think MiCA is a great example of that, right? So this is a far-reaching regulatory regime. It is extraterritorial, similar to GDPR. Do you remember GDPR? Like, oh my God, I have to warn about cookies if I have people visiting from Europe. It's obviously more than that, but MiCA is extraterritorial, and it basically says there are authorized stablecoins that are regulated by rules set by the banking authorities and by regional central banks in Europe. And effective December 30th, any platform in the world that offers or sells or promotes unauthorized stablecoins to European persons, let's say you live in Germany and you go sign up for some service that's maybe operating out of the Seychelles, and that service is offering an unauthorized stablecoin. That is illegal, in fact. And so the biggest platforms are already delisting unauthorized stablecoins. Binance, Coinbase are already delisting unauthorized stablecoins for Europe. And so as regimes come online, like in the United States as they come online, in Japan it's the same thing, right? Dollar stablecoins, we hope and expect to be the first global dollar stablecoin to be widely available in Japan, but it's a permitted function. Right. So that should be viewed as a good thing because it really establishes this baseline for safety, soundness, reserve management, transparency, compliance, these things that are really important if we actually want this to be used for more than just crypto trading. And so, but to answer part of your other question, Of course, people are going to use lots of different things, and there may be people who really want to be outside of the global financial system. They may be wanting to hide their money, or they have other purposes, and so there's always a shadow banking market and the like. That's just part of the world.
Yeah.
But the shadow banking market isn't that $130 trillion of electronic money, right? That's like the money that's used for the credit economy, the trade economy, household savings, investing, all of this real world, activity, and that's what we're focused on.
So if we talk about regulations and policy, then out of the jurisdictions that you and I have talked about thus far, it does not include the United States for whatever reason, right? And I think we can read through on the disparity of in terms of opinions coming from different parties, but more importantly, I think it's dumbfounded in my sense why the largest stablecoins are all U.S. dollar based, but yet there is no stablecoin regime. Now, from my work at the Crypto Council, I know Senator Representative Patrick McHenry introduced the bill earlier this year. And then I think recently, earlier this month, Bill Haggerty stablecoin bill was also presented as well. Do you finally see things moving in the right direction? Is it going to be at state level, or is it going to be at federal level? Because obviously the U.S. kind of regulatory regime is quite different than many other places in the world.
There's huge progress on stablecoin regulations emerging in the United States, and just to remind your listeners. The United States was the country at the G7 and then the G20 driving to make sure that there's stablecoin regulations consistently around the world. So the U.S. has been the driver. The Presidential Working Group on Financial Markets Infrastructure, which includes all of the regulatory agencies, the Federal Reserve, the U.S. Treasury, and others, and the White House, issued their recommendations to the U.S. Congress and said it's urgent that Congress act to enact these laws. Now, the policy making in the United States is different than policy making in Hong Kong. The sausage factory, it's not a smooth process necessarily.
I'm not sure if I would use the word smooth anywhere, but yeah, get your point.
So, however, a couple things for context. So one is, we were very close to having that go into effect into law and getting signed into law in 2022.
Oh, really?
And then there's this whole thing where like this company called FTX,
of course,
was very problematic.
Yeah.
And like there's this guy, Sam Bankman-Fried, who basically had like given huge amounts of money to all of the politicians in the United States, and then they really didn't feel so good about working on policy in crypto for a while.
Yeah.
So that kind of put a pin in it for about a year.
Yeah.
But in reality, though, none of this is about an individual or an individual company. And so once the blast radius had sort of completed and settled, people got back to work. And so people have been very hard at work. And stablecoin regulation is a very bipartisan issue. There's strong support for it from the White House, from the Federal Reserve, from the Treasury Department, from the leading states, from the Republican leadership, from the Democratic leadership, from key committees. So there's a huge amount of alignment around it. And really, there's a couple of issues that are in the drafts that are being negotiated, and we do expect it to become law. There's a big push happening right now to try and have that become law before the end of the year.
Really? Wow.
And so in what's called the lame duck session, which is basically between the end of the election and the end of the year, there's a whole series of must-pass pieces of legislation which the stablecoin bill could be attached to. So there are many key players that want to see that happen. The outcome of the presidential election and the congressional seats will have an impact on whether that can happen or not. And so there's certainly a scenario where that happens. But everyone has made it clear, the individuals who will lead the key parts of Congress, whether they're Republican or Democrat, have both said this is a high priority to get done in the new Congress. And so we're quite optimistic about all that. And then to the question of state or federal, The stablecoin bill, the Payment Stablecoin Act, essentially defines a model where banks and non-banks can issue dollar stablecoins. The core standards for stablecoin issuers are set by the Federal Reserve.
Right.
So the Federal Reserve is the central bank is really defining the kind of fundamentals. And similar to the U.S. banking system, where you can be a state chartered bank or a federally chartered bank, there will be an option to be a state chartered stablecoin issuer or a federally chartered stablecoin issuer. And there may be kind of thresholds. You get to a certain size, then you need to have more federal oversight, or you could directly be regulated by one of the federal banking agencies as well. So those are some of the things that are in the bill right now, I think we're very close.
And do you see? I was actually quite surprised when I was reading some of the recent proposals in regards to the allowance of kind of private companies as well as regulated banks to issue. Because if you look at a place like Japan, for example, right, only banking institution, trust banks are able to issue stablecoin, no private company. Hong Kong regime's a little bit different.
Well, banks
Singapore,
are private companies.
True, but regulated kind of financial institutions. So I was actually quite surprised. I'm pleasantly, pleasant to see that. And I think from your point earlier, this is getting bipartisan support, which is quite good to hear. Now, the other part though is that what I'm also hearing kind of bipartisan support is that there is this adamant opposition to CBDC, and a lot of people in the industry, especially those that are not in Web3, are still very confused between kind of stablecoin, which is deemed as a digital dollar, and then you've got CBDC, which is also a digital dollar in some sense, very different things, of course, from a governance and from a control perspective. But it seems like there's no direction going towards a CBDC in the US.
Doesn't exist.
Doesn't exist.
Yeah, there's nothing happening.
Okay. Doesn't exist because you don't want it to exist?
No,
Yeah?
there's no work happening.
Right.
And there's no interest in Congress in picking it up.
Right.
So there's nothing happening.
Interesting. I mean, there are so many CBDC projects that are happening, pilots that are happening all around the world. Research, I would even say science exercise, but yes. And there's obviously lots of talks around that. I mean, even the regulator here are both doing obviously stablecoin sandbox, but then also CBDC, sandbox as well. Nothing like that is happening in the U.S.
Correct. That's right.
Interesting.
I mean, look, the reality is almost everywhere in the world, including in China, right, the private sector is the dominant force in payment system innovation.
Right.
And one of the reasons why the ECNY is not successful is like it doesn't have a lot of utility, right? Alipay, WeChat Pay have extraordinary utility, and these are very innovative technology-driven companies, and the government can't keep up with that. Yeah. And now we're talking about internet-based infrastructure where you have open source technology that is constantly upgraded, where there's constant sources of innovation in that infrastructure, and there's no way any government can keep up with that. And so the key is, what you want to make sure that the form of electronic money is as safe as possible and has the appropriate supervision by central banks, and that their sort of promise to society to kind of have a safe form of currency can exist. But you want to tap the free market, and you want to tap technology entrepreneurs, and you want to tap open source innovation, and that's actually how you're going to compete. And so that's how the market is developing. And what's interesting is that despite the research projects on CBDCs, the highest priority for all of these governments is stablecoin rules, because the market's already here.
Exactly.
The market's already delivering this. And there's an urgency to make sure, hey, we're going to make sure we've got good regulation around it. And my strong conviction, obviously, is that stablecoin innovation is going to explode all over the world, and it'll just be kind of a done deal. Now, I think that there is a very key role for central banks supervising these issuers, just like they supervise banks as money issuers. 95% of money in circulation is privately issued by banks. So most money is privately issued already today. But central banks supervise that issuance. They supervise that activity. So central banks are going to need to play a key role in the supervisory realm in making sure that this works. And I believe ultimately, that the core technology that central banks use for their core electronic systems need to be continually improved and upgraded. Like there's no reason why, like the dollar is like a cluster of Oracle databases running on like old like microcomputers, and like that's the dollar. That's the architecture of the dollar. Like that's not great. Like I'm a technologist. Like I know you can improve that. And as someone who needs to face the Fed potentially and have an infrastructure that faces the Fed in the operation of USDC, that could be very much the case going forward. I would rather interface to the Fed's systems using a distributed ledger and all the advancements that come with cryptographic forms of money. I'd rather do that than like FTP servers and text files and stuff. So, like there's the need to upgrade infrastructure, and that's like I think that's the responsible thing for governments to do. But that doesn't mean that they need to be the interface to the whole market in terms of how this new form of electronic money works.
I did a debate, I think it was 2 weeks ago here, on kind of stablecoin versus CBDC, regulated stablecoin versus CBDC. So let's kind of bring the bar roughly around the same kind of standard. And I think a lot of my rebuttal continues to be that show me a CBDC that's already in the market, whereas stablecoins are already out there. I think a lot of folks that have heard about the ECMI in China and some of the larger numbers that kind of the government has been advertising, the interesting thing is they're almost copying a page out of crypto because they're trying to force usage. So they're essentially airdropping. They don't use the word airdrop, right? But they're airdropping
coupons.
It into coupons, into ECMI wallets, and then encouraging them to actually use it for tourism or whatever it is. I think it's still it's a worthwhile exercise, but I think at the end of the day, especially in a place like Hong Kong, where if you look at the Hong Kong dollar, it has been a stable coin for 40 years, right? It's been pegged to the US dollar.
The original stable coin.
Exactly, right? So, and it's issued by three banks, right? So it's not issued by our monetary authority here. So to have all of a sudden a kind of central banking agency to now manage account and manage wallets for every citizen just becomes very difficult to do, especially if you haven't been in the business of doing so. So I'm glad to hear kind of your viewpoint on CBDC. Obviously, we're both in the stablecoin business, and I think that's the form that will take much more of a vibrant kind of ecosystem development across the world, rather than in single jurisdictions where there may be some factors that determine one thing versus another. I wanted to kind of switch gear a little bit. We talked about US dollar stables, we talked about non-US dollar stables as well, but even in the US dollar side, there's now a lot of existing institutions that are coming into the market offering their own version of a stable coin. So obviously PayPal is a great example. I read the other day, Revolut is now thinking about doing something like that. How do you see established traditional financial or payments companies that are also trying to get into the game? How do you see that kind of happening in terms of positivity for the market development, competition? Is competition good in that sense? What's your view?
Yeah, I mean, look, if there's no competition, there's no market.
Yeah,
right. So I think as it's become clear that this is going to be a core legal part of the financial system, a lot of players are coming in, and for some players it's existential, right? Mm-hmm. If there's this new technology that basically commoditizes payment utility to be a free service on the internet, and your core business is being a payment utility that charges 4% for transactions, you better figure it out. Right. And so you have a lot of firms who are interested in this. And we're seeing more, stable coins being issued, and I definitely view that as a very positive thing, to have competition in the market, and we welcome it. And I think, the focus for us is just continue to build a great product, continue to build that product that works all around the world for users around the world, build a platform and an ecosystem that's thriving, that developers and other companies can build on and make money with us, and focus on building a great platform and building great liquidity and solving problems, and that's all we can do, and hopefully have a platform that people want to use.
Right. I mean, at least from what I can see, I think a lot of these companies that got existing networks, right, whether in the payment space or the financing space, are really building a stable coin to serve their own network, right, rather than having something that is ubiquitous, could be used in any scenarios.
That's the theory,
yeah.
But we haven't seen that actually play out.
We haven't seen that. I mean, I think even here in Hong Kong, we're starting to see some very large players that are not in the Web3 space, kind of getting into the game as well. And one would wonder, what is the objective? Is it to really digitize the existing infrastructure as part of a transformation plan? Or is it really to have something that is truly Web3 that are enabled, which is borderless, which is composable, which is about connectivity rather than owning everything myself, and it's only used in my own network. Yeah,
I mean, the real innovation is this is the public internet infrastructure that allows these protocols to work openly, broadly, and so sort of using a kind of like a private label stablecoin in a closed loop private network, like why bother? Yeah. So that's not the actual innovation of the market. But I think one thing to note is that as I talked about earlier, when we think about what we do, we think about operating an internet scale platform utility. Mm-hmm. And that internet scale platform has strong network effects. It has liquidity network effects, and it has developer application and actual end user utility network effects. And those are really strong. And so while we have seen some large payments companies, for example, launch stablecoins, they just don't have adoption. Right. They have not grown. Probably the best known example, I think, in the last 24 hours has done $10 million of transaction volume. We've done about $10 billion of transaction volume. And so you're talking about huge orders of magnitude differences. And so it's not necessarily straightforward to just like, hey, I'm a big company and I'm a big brand and I put this thing out there and people are going to use it. Similarly, right, there have been all these companies that have launched like the ability to buy Bitcoin or Ethereum, and they're big brands that offer this, but people aren't going to those platforms to do it. They're going to best-in-class platforms like Coinbase or Binance or local exchanges in their markets, right? They're going to the pure play companies who've been building great products in a very extensive way and that are more, internet and on-chain native. And so I think, the kind of add-on concept for established players, it's not necessarily a very compelling strategy to compete.
It's also about focus, right? If you've got an existing business and this becomes a project, then can you realistically drive home that massive potential and that network effect? Yeah. It's questionable. Wanted to ask a little bit about so stablecoin today, especially in regulated jurisdictions, or at least the ones that have regimes, they all focused on non-yield bearing stablecoin, right? Because as soon as it's yield bearing, automatic, payable on the blockchain, it looks like a security, right? But every day there are new stablecoins, yield bearing, that are trying to one up each other on different collateralization, different reserve, and I'm dumbfounded by the launch of these stablecoins. I mean, some people are now calling this the stablecoin summer, right? 2 years ago it was the DeFi summer, and now stablecoin summer. And I continue to think that, I mean, if you pay any attention to regulatory regime around the world, that is almost a non-starter. Are you seeing that as well? Because we hear this every day, right? It's just very strange.
I think tokenization of existing investment instruments, government bonds, private credit, other forms of investable coupons, right? The tokenization of investment products is a huge opportunity, obviously. Yep. And the kind of tokenization of things like money markets is a very natural thing, and we've partnered with BlackRock, which is the largest dollar money market fund issuer in the world, and have created a way for USDC to seamlessly work with that. Every one of these products that are being built, USDC is the primary way that you kind of convert and kind of purchase, redeem those. And so there's this interesting interplay between, an investment, product and a cash instrument, and we see some pretty interesting utility that can come from that. The use of these yield-bearing instruments as collateral, like in traditional markets, repos and other things are collateral for a huge number of financial market transactions, capital markets transactions, and so we definitely see these TradFi structures kind of finding their way into crypto market structures, and you're going to see that play out. You're going to see that play out in how asset managers, trading firms, exchanges, others kind of operate, and I think that'll be one of the big stories of 2025 is this sort of maturation of that architecture. And so we're paying a lot of attention to that, and we see a lot of synergy between what we do with the kind of regulated cash settlement layer and these new investment products that are made available on chain as well.
Very cool, very cool. So last question. Where are you heading next? So after Hong Kong, are you heading to other places in Asia, maybe Singapore, where you have a big presence, or are you going to the Middle East potentially, where everyone seems to be going these days? Where are you heading next?
We're a global company, and we have operations in a lot of locations. We have a small team in UAE. We've got our big presence in Singapore. We've just recently expanded in Brazil. And significant expansion in Europe. We have expansion happening in Japan, so lots of places. So I have a great team that is working on activating Circle and in a lot of these places. But I get around. Excellent.
Well, Jeremy, thank you for tuning in to Smart Context, hosted by Web3 Harbour, and right here during Blocktober, which is a massive month in terms of kind of FinTech Week as well as Web3 activities. Thank you for coming to Hong Kong, and we'll see you next time.
Thank you so much.